Thematic investing has been gaining popularity in recent years, with a study showing that almost 2/3 of European investors are now using this strategy. With that in mind, you might be wondering, what is thematic investing? Well, by the end of this video, you won't just know what it is, but you'll also know the risks involved, and you'll be able to work out whether it's a good option for you. It's important to note that none of this is investment advice or a recommendation, and we are not financial advisors. Before we get into the finer details, we need to clear one thing up. What is thematic investing? Thematic investing is, simply put, investing with a specific theme, or focusing on particular industries. In other words, you're choosing your investments based on a shared characteristic, which could be the market sector or the approach they have to business. Thematic ETFs are funds that track a list of companies with shared characteristics and invests into them all at once. So, if your theme was technology, you might choose an ETF that invests into all of the biggest tech companies around the world. Or you can go more narrow and invest into an AI-specific ETF made up of only AI tech companies. Or if you wanted to focus on sustainability, you could invest into companies that have a more ethical approach to business. These are known as ESG companies, which stands for Environmental Social Governance. The general idea with thematic investing is that you're putting your money into an industry that you believe will give you higher returns than if you were to invest your money elsewhere. To use our example of AI technology, this sector has seen a huge rise in recent years, so investors might invest in an AI-specific fund to try and benefit from that sharp growth. While that might sound like a great investing strategy, there is one big downside that we need to talk about. Let's say you were to invest into a global ETF that tracks companies all across the world, and one country, say the UK, went into an economic crisis. Your investments in all the other countries would prop up your investment to help keep your portfolio more steady. And that's really the risk with thematic investing, a lack of diversification. If you're only investing into companies within one particular business sector, all it takes is a decline in that sector for your entire investment to be affected. Maybe the bubble in the market pops, or a new legislation makes it harder for these businesses to operate. Maybe social pressure puts an industry into decline. There are many things that could cause an entire industry to fizzle out. Investing into a thematic ETF will still provide you with some diversification because you're investing in many companies at once, rather than having all your eggs in one basket. But it's the concentration on a single industry where the risk comes in. Even if you have 100% confidence in where the industry is going, the results are far from guaranteed. Take the clean energy theme as an example. In 2020, some clean energy ETFs, like the S&P Global Clean Energy Fund, rose by over 200%. However, between 2021 and the time of recording now, in late 2024, the price has dropped by over 50%, with other funds in this area seeing the same results. While this volatility alone makes thematic investing carry more risk, it's not the only thing you need to consider. These thematic ETFs will often try to tap into a market that is either growing rapidly or predicted to grow significantly in the future. But predicting the success of a theme involves similar challenges to picking individual stocks. Let me simplify this issue for you and stick with me on this one. Imagine Arsenal Football Club was scheduled to play against a team of literal babies in 10 years' time, and somehow you could legally bet on the outcome of this match. Do you think that you'd have spotted something everyone else has missed? Or would the odds of Arsenal winning already be accurate because everyone knows they're probably going to win that match? It's similar with stock prices and industries. Just because you are very confident something will happen in the future, it doesn't mean the stock prices will grow with further adoption. It could happen, we're not saying that it won't, but there's also a chance that the predicted industry growth has already been factored into the current stock prices. That's one of the reasons why companies like Tesla and Nvidia have really high PE ratios, that's price to earning ratios, or their share price compared to how much they actually make, when compared to more established companies like Johnson & Johnson or Walmart. The level of risk will also vary based on what the thematic ETF is focusing on, of course. Technology has been a rising market for years and seems like it will only continue to grow, at least in my opinion. But if you were to try and invest into something that might explode in the future, you'd be taking on a lot more risk. Another important talking point to discuss here is fees and demand. Because thematic funds are smaller and less people are generally interested in them when compared to the much broader funds, fees have to be higher to make it profitable for the fund managers to spend time tracking and managing them. This means thematic investing is generally a little more expensive in fees than broader, more popular funds. Though this won't always be the case, and obviously if you think you're going to make much more profit overall, then the increased fees don't matter too much. On average, actively managed thematic ETFs charge a 1.1% annual fee compared to the 1% for non-thematic ETFs. And this charge is also higher for passive thematic ETFs as well, which have an average management fee of 0.6% compared to 0.5% for non-thematic, according to data from Morningstar. Lower demand can also lead to another issue. Choosing a niche market might mean there aren't many people buying, meaning you might find it harder to sell your ETF once you've bought it. Or at least you might find there are larger differences between the price you want to sell at and the price someone is willing to pay. With all of that being said though, one question still remains. Is thematic investing a good idea, and should you be doing it? Well, we can't and would never tell you what to invest into, but the honest answer is, it depends on your approach to investing. If you're looking to put money away for the distant future and forget about it until retirement, you might want to tread carefully with thematic ETFs. 10 years ago, not many people would have predicted how good AI is today. So who knows what industry will be all the rage in 10 years' time? I definitely don't. But if you have a strong belief in a specific industry and feel like it's undervalued currently, then this could be a strategy for you, as long as you've researched it enough and spoken with financial advisors if necessary, of course. An article on wealth management suggests that, according to Morningstar researchers, the number of thematic funds that closed down in the first half of 2024 outnumbered new fund launches for the first time since 2008. And over a 3-year period from June 2021 to June 2024, only 9% of US thematic funds outperformed global equities. That's really surprising considering how popular technology funds are, and how well technology stocks have typically performed since the pandemic, especially those in the AI field. Over longer time periods, the success of thematic funds versus global equities ranges between 15 to 18%. Past performance is not a reliable indicator of future results, so that's no guarantee this trend will continue going forward, but certainly in the past at least, two things seem to be fair to say. The difficulty of picking a market-beating thematic fund is probably harder than it might look, but also your likelihood of success isn't so low that we'd consider it impossible. There is certainly some room for some people to make a success out of it. Thematic investing has its pros and cons, so depending on your approach to investing, they might be like Marmite. You'll either love them or you'll hate them. If you're an active investor, you can use the thematic ETFs to gain exposure to markets that you strongly believe will grow in future, whilst also diversifying your portfolio. However, if you're a passive investor who only cares about the distant future and not short-term swings, you might not want the headache of having to check the markets or continually update your knowledge and research, so more diversified investments could be a better option for you. We actually looked at the top 10 most popular funds bought by UK investors in 2024, and some of them will shock you. And now that I think about it, it did include a couple of thematic funds. I've put that video on screen for you to watch next.